Good morning, ARMR Insiders. Welcome to the morning meeting of our virtual hedge fund. Thank you for joining me. Hope you guys had a great weekend. We are going to be talking today about our stock market portfolio, going over our 4 portfolios. So I use these 4 portfolios to manage my own personal capital. And then when I'm managing capital for others, I take from these 4 and create portfolios that fit the risk tolerance and the goals of the individual I'm running money for. Now, it's your job as a virtual hedge fund participant right now to view yourself as a portfolio manager. You've got your own assets. You're bringing them to the table here. Grab a pen, piece of paper, get ready, write down your strategy, and then you've got to execute your strategy when the bell rings at 9:30. Nobody can do that for you. You got to figure out your risk tolerance, your goal, execute it. You have to be the smart money. So this virtual hedge fund morning meeting is to get you ready for the trading session. So the 4 portfolios that we're using to manage capital here. We've got our day trading portfolio. I call that the carry trade. All I'm doing is trading the S&P. When the risk monitor is red, and it went red on the 21st of this month, right? No, February. 21st of February, right? Risk monitor red, 21st of February. Market's been straight down ever since. We've been in a defensive posture since then. We've made money short, and we're making a killing day trading. And I've told you guys in the past, risk monitor reds are actually the best time to day trade because the volatility goes berserk. And so the reward for the risk we're taking is enormous. And therefore, we're in there long and short. So we'll go over that. Our macro fund, all we do is swing trade indexes and how it may change. Then we have our innovative growth portfolio, max cash. When the risk monitor goes red, you got to get out of Dodge and protect capital and innovative growth because those stocks get annihilated. They have great runs on the upside. I love investing in innovative growth, but you can't do it now. And so we have max cash in that portfolio. And then we have our turnarounds in our dividend portfolio, and that portfolio is crushing it. We are creating crazy alpha in that portfolio. But I want to tell you what we should look forward to and be prepared for if this market continues to collapse. So let's dive in and talk about all those things. If you have any questions, guys, you can always throw a question in the comment section. I'll try to get to it by the end. Let's begin with a review of this picture right here. Okay, this is a chart you're looking at. On one side is the year 2000. On the other side is the year 2025. We talked about this a couple weeks ago. In the year 2000, the similarities to today are just stunning right now. It's a bit disturbing. Let's go over a couple of the top similarities. You're looking at a chart of the NASDAQ 100. So in 2000, we have the dot-com bubble. In 2025, we have the AI bubble. What's a bubble really mean? It just means overspend on a particular technology that's grabbed investor excitement and driven it to levels that are unsustainable. It doesn't mean the technology is no good, right? The dot-com bubble led to an unbelievable few decades of innovative growth in the internet stocks. So the AI bubble and overspend, just like in 2000, it's happening now in 25, doesn't mean AI is dead. It just means you and I are going to be able to collect unbelievable AI investments cheap when this is all over. And so the key now is to protect capital. So while everybody else is puking out these names over the next couple of months, we can step in and pick them up cheap. That's what created real wealth after the collapse of 2000. But let's talk about how long that takes, because it's patience that's required. You don't buy every dip. Buying every dip is a Pavlovian response. It's not a real way to run money. You got to be patient. So let's go talk about the next thing that's similar. Gosh, guys, in the year 2000, the dot-com collapse, and it ushered in a major recession. So you had the dot-com collapse. You had the leadership NASDAQ 100 lead the breakdown. In 2025, what's leading the breakdown? It's the NASDAQ 100 hateful 8 names. It's just like 2000. And now we got a recession coming on. But if you want to go back and just take a look at the recessionary situation in 2000, the government bureaucracies that determine what is a recession and what isn't didn't call our economy a recession until March of 2001. It took a whole year of a collapsing stock market and a bubble bursting before the government was able to admit that we were in a recession in March of 2001. But obviously the recession started early, and the market is a lead indicator. It sniffs out a recession well before the government's willing to admit it. And so all of 2000 was the equity collapse and the recession that was kind of like a rolling recession that got really bad March of 2001 through November. We have the same situation here, whether it's brought on by tariffs or other geopolitical events or whatever, it doesn't make a difference. We've got a rolling recession coming. The similarities are so real. And then I'm going to tell you something, and you might not like what I'm about to say, and it's not easy to hear, okay? But I'm going to say it, and I don't want to say it. But from a political point of view, what punctuated the collapse in the market and the recession in the U.S. were Islamists driving planes into the World Trade Center in 2001. And so we have today the same insanity we're dealing with. And you might say, on a much larger scale, Islamic extremists on a much larger scale. God forbid it results in what happened in 2001. The similarities in the stock market and in the geopolitical environment are disturbing right now. So let's talk about how to run money. What do you do in a world like that? Well, first of all, take a look at the stock market in 2000. It peaked on March 24th. The NASDAQ 100 peaked. You're looking at that right here. Total collapse. 2 months later, the market was down 40%. By May of 2024, the NASDAQ 100 had dropped 40%. So now look over here and you can see where the market is. Market started on the 21st. By the way, this is an interesting piece I saw over the weekend. Jamie Dimon dumped, Jamie Dimon runs JP Morgan, right? Hadn't sold stock in a long time as an insider at JP Morgan. Dumped a bunch of stock on the 21st. March 21st. February 21st. And of course, we also heard right around the 21st or the 20th, I think it was, how incredibly large Warren Buffett's cash balance was. I think he owns more U.S. Treasury bills than the U.S. government. And when they asked him, why do you have such a massive cash hoard? It's because basically in Warren Buffett speak, and I'll turn it into English, everything's overvalued and I can't find anything to buy right now. Then the market cratered. And I saw people talk about this on X about how did they know and there's some conspiracy. Well, I'll throw my hat in the ring. We went to a max cash position on the 21st, the exact same day of the Warren Buffett conversation about cash And Jamie Dimon dumping stock, which he hasn't dumped in a long time. By the way, he has a bunch more registered to sell. He's about to sell a bunch more of his JP Morgan stock. So am I part of a conspiracy? How do we know? How do we know on this desk that the market was about to get its head handed to it? Simple. We use algorithms to monitor 10 indexes. We call it the risk monitor. Okay? 10 indexes. Our risk monitor went red on the 21st. And I told you then. You were surprised because 5 days prior it was green, right? We had a new green signal, and in 5 days it broke down. Always said to you, the risk monitor is not a predictor, okay? It's not a crystal ball. It's a probability algorithm. It's not 100%. We put capital to work when it goes green. The most vulnerable time is the first 5 days. If it fails in the first 5 days, there is an unbelievably high probability that the market is going lower and in an aggressive fashion. Going risk monitor green to red in 5 days almost never happens. When it does, it's valuable information. Jamie Dimon, Warren Buffett, ARMR Investing way. Max cash, risk monitor red. Something's wrong with the market. And it just keeps getting worse and worse and worse. You want to know why? I offer up March of 2000 on every level, from bubbles to NASDAQ collapsing leadership to recessions to Islamic extremists. We got to protect capital and we have to be patient. If the market follows 2000. Let me tell you something, guys. I lived through that. 2000 and 2001 were brutal times to try to run money. And if you were jumping in every time the market sold off 5%, buy the dip, they tell you, you lost an insane amount of money. And it took you years to get back to new highs in your net worth. So patience is key right now. Protecting capital is the action right now. All right, let's jump over to what our portfolios look like. Share these comments with anybody you think needs some help in this market, because there's a lot of people out there that need help, right? So you like this, you share it, but only people you think are worth it. Okay, DM some of your friends you think are worth it. This is a virtual hedge fund desk. I love working with you guys. I can't wait to get started at 9:30. I'll see you all on the desk at 9:30. Everybody, at the end of the day, no matter what I say or what you hear anywhere else, you got to figure out your strategy, your risk tolerance, what your goal is for that portfolio, execute it, and be the smart money.